Welcome to the NGEN Markets Training session. So in this session, meanwhile others are joining in, we will talk about the topic for today. So this session will be all about portfolio comparisons of your prospective clients versus your own model portfolio. We will see the parameters like the performance, the asset allocation, the drawdown analysis, and the rolling analysis. And then we will discuss about the new updates which we have currently onboarded in the NGEN Markets terminal, and then we can head over to the Q&A section. So any questions you have, any queries you have, you can write it in the chat box or verbally, and we will try to address them. So let's get ahead with the session. I will show my screen for the terminal. So as you can see, this is the NGEN Markets terminal, which we have in front of you. And to do the portfolio comparison, we have two ways to go ahead with the portfolio comparison. The first way is to directly head over to the compare section and then go ahead with the compare portfolios. This is the first way where you can load in two portfolios and compare them. The other way is to actually through the portfolio section. So through the portfolio section where you can see this, here we have given the compare to portfolio button. If you click on it, you will see the compare portfolios given here in the system. Now let's come to the topic where we are going to compare two portfolios. So how do we compare two portfolios? Before comparing two portfolios, the main thing is that you need to have portfolios saved into the system. Now for the saving part, what you can do is if you want to onboard any prospective client into the system, we have given you the statement analyzer here. So the statement analyzer actually adds your NSDL, CDSL, and CAMS report into the system, and then you can actually save it as a portfolio into the system. Once you have done that, then you can easily load a client. So for an example, let's say for an example, we are loading a prospective client here. So this client is now added into the left side. And for an existing client or for an existing model portfolio, if you want to compare it with any particular set of a portfolio, you can do that here in the system. Let's say we already have a pre-saved model portfolio. So we are adding a model portfolio here. And here you can see now there is a comparison between the portfolio number 1 in the left side and the portfolio number 2 in the right side. So let's get ahead and let's see how we can actually compare portfolios and then come up with a proper recommendation that how the portfolio which we have provided, the model portfolio here, is actually superior than the original current portfolio. Now, what does this signifies? This signifies the current asset allocation of the prospective client. Similarly, this also signifies the current asset allocation of our model portfolios. Now, what you can do here is you can actually gauge the performances of the prospective client versus the model portfolio. Here we have given a couple of tabs which shows the performance here. One thing is that we can actually change the period of any portfolio comparison. Here you can see the period is from 30th December 2013. This can be changed directly from the start date. So for an example, if you want to change it from 2014 instead of 2013, you can do that. So here we are just choosing 2014, let's say December 2014. And once you have done that, you can just click go and the portfolio will now run based on 1st December 2014 till the current date scenario. And here now what you can see here is the annual return difference. Now annual return difference actually signifies the difference between the average annual return from the first portfolio, which is this second portfolio, against the first portfolio. So why it is positive here? Because the model portfolio has actually outperformed the prospective client portfolio by more than 3.35%. To actually gauge it, you can actually see the difference here itself. The average annual return given here in this right side shows you that there is a return, average annual return of the model portfolio, it's 14.43, and the average annual return of the prospective client is 11.08. The difference between them is definitely positive 3.35%. Now, this annual return will help us to determine is this portfolio on a longer run for a period what we have chosen is actually better than the current portfolio of the prospective client or not. Now, here you can do a couple of more comparative analysis. Like for an example, we can just take a look toward the stats here. One stats what you could check is the 3-year and the 5-year stats. So for an example, for a 3-year stats, you can see the 3-year return sets are actually positive for the model portfolio, and it has given more than 4% comparative return sets. And here this 5-year stats is actually positive as well. So what we imply here is that the performance stats, the comparison here is actually superior than the current portfolio of a prospective client. When we talk about the returns, we should also take a look towards the risk, right? So for the risk, we have given the annual volatility and the Sharpe's ratio. So here what you can do is you can see surprisingly the return sets are actually higher for our model portfolio, whereas the annual volatility, which is risk, a standard deviation, is actually lesser than the prospective client, which actually signifies why do we have a better Sharpe's ratio? Because we are having better risk adjusted return. Similarly, we have also given a couple of other stats which will help you to determine what has been the performance on an average day, average month, and even an average year. So what is an average yearly performance of this portfolio? It's 11.91. What about the up and down months? So this up months and down months signifies the positive and the negative months. So positive months, basically 66 months has been positive, and out of that 33 months, out of the entire series of the start and end date, it has been negative on a return set, and the down years as well. So here what you can do is you can actually compare the performance side by side of the model portfolios of a prospective client portfolio and even any such portfolio. For the matter of fact, you can add in any portfolio of a stock as well to compare against a prospective client. And then you can check what has been the differences and is it making sense when you're comparing the two portfolios. Similarly, here we have given two more tabs. Now, the Sharpe's ratio, we have already given the explanation here that we actually have a better Sharpe's ratio, whereas the correlation will actually determine that how correlated are these two portfolios. And you can see that they are highly correlated. When one has a fall, other has a fall as well. A high correlation is closer towards 1, which is 0.95, and a lower correlation is farther away from 1. So it can be 0.50 or even 0.15. Similar to that, you can also see a very important factor here. Important factor here is these months which we have given here, right? So basically these years. So here you can see this is the yearly format. And here what you can do is you can also check the asset allocation. So for the asset allocation, you can now compare the asset allocation for the two portfolios. Now, why this is important? Because there you can actually understand what has been the concentration of the two portfolios against each other. So for an example, we do know that these are equity based portfolios given here, right? So what is the difference between the two portfolio based on asset allocation? One difference can definitely be the equity sectors they are allocated in. Like you can see, there is a high concentration of pharmaceuticals in the prospective client's portfolio. Whereas here, our concentration is in IT software and banking. So you can see how it is differently concentrated and how they are making sense when you're taking a look towards the performances. And for an example, you can also check the comparisons between the market cap. Now here, the market cap here, the large cap, both of them are pretty similar. Whereas the market cap here in the model portfolio is quite higher. But what you can actually see is the mid cap exposure. The mid cap exposure of the prospective client is actually higher than the mid cap exposure of the model portfolios. And this makes a lot of sense because you can see a couple of mid cap funds being added into the prospective client's portfolio. And that is where you can take a decision as to why this prospective client portfolio is highly concentrated and is exposed towards a bigger risk, right? Now, these other tabs are more useful when you have debt portfolio. So for example, I'm just adding a debt strategy here. So you can take a look towards this. So when you add a debt portfolio, you will see some more tabs. So let's say I'm adding another debt strategy, right? So this is the one. One second. So I've added a debt strategy here. And these strategies you can actually compare against each other. And you can see the debt side of the portfolio. Now, for the debt side of the portfolio, it's pretty useful because you can now understand In the left side, the left strategy, what I have more concentration towards government securities and corporate debts, right? And in the right side, what the portfolio I have, it's another highly adventurous portfolio. It has more concentration towards NCD, government securities, and even corporate debts, but minimal of it. And you can also do the comparisons of the portfolio credit ratings within one single go, and also the comparison of average maturity. Now, you can see here, I'll just zoom this in for your convenience. You can see here, the average maturity here is 5.56 years, whereas here it's 4.94. So it's a kind of a comparison you can do in one single go, whereas the YTM is pretty similar. The average YTM of the entire portfolio here is 7.67, whereas here is 7.62. And that is how you can do the comparison on the debt side as well. If you have some debt securities or even a portfolio of entirely debt based mutual funds in the system, and that will help you in effective comparison. Now let's load in our simple equity based portfolio to do further analysis on exposures and rolling returns. So let's say we are loading another portfolio of a client. So this is our prospective client, and I'm going to load in a conservative model portfolio here. So the point of this comparison is that you can do several comparisons of any portfolios which you have in the system. Let's say if I have a conservative strategy and I would like to compare my conservative strategies with the prospective client, I can easily do that. Now here, when I do the exposure comparison, you can easily see that the top equity exposure, which is Sun Pharma Industries, is allocated here, whereas we have banking as an exposure more towards it, right? And then you can also see that I do have some of the debt exposures through some of the funds like Value Discovery, right? So you can actually take a look towards the comparison and even the market cap. Whereas you can see the top market cap exposure, which we have discussed before, is 42 in the left side. Whereas in the right side, so whenever I'm doing the left and the right comparison, it is the comparisons of the two portfolios given here, right? And you can see the comparisons given here for the market cap here and for the market cap here, which will help us to determine what the portfolio of the prospective client lacks and what kind of a solution our conservative strategy can give for that prospective client, right? And here we also have a pretty useful analysis, which are these two analysis, which will give us an idea that what should the client expect from both of the portfolios. Like for an example, when you're running a rolling returns from one particular start date, which is 1st December 2014, and you would like to know that for a 1 year period, what should the client expect on an average for such a portfolio? You can see this rolling returns for a 1 year period is 11.74% on an average, right? Compared with the model portfolio, which is our conservative strategy, which is 14.47. So it's definitely higher than the prospective client's portfolio. And the volatility, which is on an average is 16.31 for a 1 year period, it's definitely similar, right? Now, the point of the risk is where you can see there is one period in the rolling analysis where the portfolio has gone as low as negative 31.29 for a 1 year period, right? So there's a one rolling period. So you can, take a look towards which period it has been. That was negative 31.29. Comparing it with our model portfolio, conservative strategy, it is negative 28.49. So had you invested for a 1 year period in our portfolio, in the most unlucky scenario, you could have lost negative 28 rather than negative 31.29, which is how it generates also the volatility. Like the volatility which you see here in the next slide is very useful to understand. Similarly, you can see that the both of the portfolios volatility is very similar. Only difference here is the return sets generated by the conservative strategy is more against the prospective client. And here you can effectively see the comparisons of the period for the 6 months and 1 year, and given here as well. So that is how rolling returns will be useful to understand, because it will give us an idea about what kind of consistency a portfolio can achieve on an average when we are taking a look towards the average return sets, right? And we also have a very useful functionality which is called as drawdowns. Now, drawdowns is most important functionality to understand the strength of any portfolio. Like we will just take a look towards this prospective client and we will just see how it is very useful. For an example, if a client would have started such an investments in 2014, in a hypothetical sense, what you can see here is from 2018, the portfolio would have been in losses for the period of 2 years, approximately. And you can efficiently see the biggest size of the loss which the portfolio has actually backtested. It is from 2018 to 2020, right? So had a client holded such a portfolio for a longer run, it would have actually backtested this size of loss for a 2 year period. And that is itself is a concerning thing. Similarly, when you compare it here, there wasn't a loss period which started in 2018. The loss period which of the similar size, it started in 2020, right? And such kind of a strength you can actually see from a recovery itself. Either the recovery would be high, either the losses period will be long. So you can actually take a look towards these two parameters. Like if the start and end date is too high, then it means there is a concerning thing, because it takes it whenever the portfolio goes in a loss period, it goes for a longer run. And that is why this portfolio has a bit of a concerning thing, because there you can see the strength that if it goes for a loss, it will be for a longer run. Similarly here, it has a shorter period of drawdown, right? And you can also see the recovery days. So both also have a still ongoing recovery. And you can actually take a look towards other recovery periods as well. We can also compare it with other model portfolios. So I will just show you another model portfolio, which is a moderate strategy. So we can just add in a moderate strategy here, right? So these kind of strategies were already saved by us in our system. And you can also do that by generating your own moderate strategies. But the point here is whenever you see a moderate strategy, even our moderate strategy is not having a bigger loss period, just like what we have. It's a similar size, but the period of the losses, the start and end date, is pretty small. And if you go for a debt, let's say, we are comparing a debt here. Now, definitely a debt will definitely not have that much of a loss, but you can see how the debt has drawdowns against an equity, based of a portfolio, and why it matters. You can see the size of the loss is pretty minimal. And that is how this portfolio comparisons can also be useful to determine why you should invest or why you should go ahead with such asset classes, and why you're trying to explain that these particular set of a portfolio are more inclined towards the client goals and objectives, right? So this is how you can do the portfolio comparisons using the drawdown analysis. Now, the point here is you can also create and generate reports. So to generate report sets, what you can do is you can effectively create a PDF report based on the capital allocation. So I will just give an example here. So I'll just load in a moderate portfolio. So once you have done that, one second. Yeah. So once you have done that, what you can do is you can create a PDF report here in this tab. To create that, all you can do is you click on this create report. Now here we have a very useful functionality, and it's also a new update. Wherever you see the PDF report, we have now given a functionality to create a password generated PDF report. It's a password based. You can protect the PDF report based on the password. So I'll just type it NGEN1234. And what you can do is you can also create a report based on the capital allocation. So capital allocation, let's say we are just generating for a 10 lakhs, right? Now what you can do is you can click go, and the PDF will now be generated, and it will be password protected. So you can either opt to have a password protection report, or either you can just, directly generate the reports. Once you open this up, it will be now password protected. Now, this is a new update which we have, and it is pretty useful if you want to keep your reports confidential. And you can just, type in the password of the report, and that's it. Now you can see this is the report which is now generated. Now here, I will talk about how this report will be useful, because number one, we have already explored how the performance tab will be useful to explain the difference between the risk and the return side of the portfolios. So this is the first report which will be pretty useful. Another thing is the asset allocation comparison. So you can effectively compare the sector exposures and the market cap exposures as well. And you can see how the right side portfolio is more inclined towards the large cap, whereas in the left side it's the mid cap. And similarly, you can do the comparisons of the rolling analysis. There is another wonderful comparison which we have, which you can call it as an action plan. Now, why this is useful? Because this is where we had input our capital. And now this kind of a capital which we have input. Now, yes, we have input 1 crore, but you can see here that that 1 crore of the prospective client, if the client goes with you, then what would be the capital allocation for your own model portfolio? So this is the action plan you would be suggesting to the client if the client is currently holding 1 crore or even the 10 lakhs. So you can just input any capital, and based on that capital, it will just show you the asset allocation of the two portfolios, which you are actually adding into the compare tab. So this is how the report is pretty useful, and you can generate a password protected reports. Not just for here, I will just show you again in the next tab how you can generate for a portfolio and even a mutual fund analytics. Now here, let's talk about the updates here. So I've completed the portfolio comparisons tab, and within updates, we have two specific updates. One update was definitely an update of a password protection of any PDF report. So I will show you a password protection report of the portfolios itself. Let's say we have a portfolio here. Let's say a prospective client portfolio here, and we load in this portfolio, and this is what the portfolio analytics is. Now here you can also create a password generated report given into the system by following the similar process I've shown you before. So when you click on this PDF, you can now generate the password. So I'm just typing 12345, and that's it. And when you create such reports, you can just create the PDF report, and now this will be password protected as well. So similarly, this kind of a report can be generated. And another set of a report which you can do it for is for the individual mutual fund analytics. So when you open the Nippon India Pharma or any particular set of a fund on individual basis, you can now generate a password protected report for that as well. So we will just show you an example here, and then we will head on to the second update which we have. So here you can also generate the password protection. It applies for all sets of reports, and this is pretty useful. Wherever you see a PDF generation option, we have given a password protection, right? Now, the second very important functionality which we talked about before was the drawdown analysis. Now, for that, we have now released a new functionality of comparing all the securities using the drawdown analysis. So here, when you go to the compare securities, here we have the new drawdowns tab, and it is very, very useful if you want to compare a mutual fund, stocks, indices, and even different sets of SEBI categories, and even some portfolios as well. So let's say I'm loading a particular set of a fund here, entire category of the fund. So I'm just loading a list from here. So let's say we are loading a list of one particular set of a mid cap composition, right? So this composition I have already saved before and saved it as a list. And now what you can do is you can now compare drawdowns of every single mid cap funds in one single go. Now, when you go to the drawdowns analysis, we now have 5 columns with worst drawdowns, second worst drawdowns till the fifth worst drawdown. Now, how does this signify and how it helps, right? We have 3 sub columns here as well. So as we have discussed before, this is the size of the drawdowns, right? For the worst one. So as a matter of fact, when you see this comparison, you can definitely know that the highest size of the drawdown for the worst drawdown was for Aditya Birla SL Mid Cap. So this will help us to understand that which fund had actually had the biggest loss on the drawdown basis. And similarly, you can see how much time, I mean, what was the length of that loss? How much time it was into the drawdown period and what time it took to recover. So these are number of days basically. So it took 234 days to recover. Now, if you want to check the analytical, view of it, the graphical view of it, then what you can do is you can just click on this. And once you click on it, you can definitely know that this is somewhere which we have seen before in MF analytics and even in the portfolio analytics. This is what the losses is. This is what the start price was, the end price, and here the end date, the recovery and the recovery date. So you can see there are the two periods where the recovery is still ongoing, and you can take a look towards this in our comparative tabs. Now here there is another useful thing is the sorting function, because now you can sort based on any particular parameter. Let's say we are taking a look towards the third worst drawdown, and I want to know the funds which have recovered pretty highly in the third worst drawdown. So I can just click on it, and I can see here that it's Sundaram Medcap, HDFC, and other funds as well. So you can do that comparative analysis in one single go. Now here you can also add an index. So as compare section is pretty robust and pretty dynamic, I will show you another use case of this is where you can add in an index. Let's say for example, Nifty Medcap 100. Now, once I've added this, you can check the drawdowns analysis even for an index. So here you can see the drawdown of the index, the length of that drawdown, and even the recovery period of the days it took to recover for that particular set of the drawdown. And when you hover your mouse on this, you will understand that what is the start and the end date of that recovery period, and that is how it will be useful for, right? And this is one use case of the drawdown comparison. Now, as you know that you can even compare stocks, you can do that in one particular, single list. So what I'm going to show you is the comparative analysis of the stocks as well to end this session. So here, whenever you add, let's say, top 10 stocks or top 13 stocks, which are held by the open-ended funds, you can see these are the stocks. Now here you can do the drawdown analysis even for the stocks as well. Now, this is pretty useful if you want to see the recovery and the sizes of the loss and even the length of the particular set of the worst drawdown analysis. Now, here we have given also one particular tab which helps you to determine the start date. Now, this is considered as minimum common period, and you can take take any particular set of a date and then analyze those drawdowns accordingly. So that's all for today's session, and that's all for the updates we have. We are actively adding a couple of functionalities every single week, and that is it. So I will now open the forum for the Q&As. So if you have any questions regarding any functionality of NGEN Markets, you can shoot those questions either in the chat box or either verbally, and we will answer them.
Umair, hi. The first point which you've covered, right? So you've compared two portfolios, right?
Yes.
Umair, am I audible?
Yes, sir.
So basically, when you compared two portfolios, basically we can also do with the model portfolio, as in with the benchmarks as well, right? So instead of doing a model portfolio on the right hand side, we can even do with the benchmarks, if I'm not wrong.
Yeah, hi, this is Arnab. So if you want to put a portfolio against a benchmark, you can actually, you don't need to come to the portfolio section. You can just run a portfolio and then select whichever benchmark you'd like to put on top of it. So for example, here we're just running a model portfolio, and then you can select any benchmark you like from the right hand side. You can use any of the NGEN reference indexes or any TRI index, or you can even create your own custom index under your login and load that up here as well.
Okay, so I can give weights to the custom
exactly
benchmarks if I want to.
Yes, you can have, you can have like 10 indices weighted in whatever weightage you feel like. Once you save it, our system automatically updates it every day as the new index values come. And then after that, all you have to do is just click on the box on the right when you're running analytics.
Okay, fair enough. And also, I think for the comparison thing, we don't have PPT, right? It's only PDF which is available.
No, so the you mean the compare portfolios? Yeah, so yeah. This PowerPoint is not yet available, but it's in the process. So hopefully it should be released soon.
Okay, fair. Okay, thanks. So, and also, sorry, one more question. So all the data in terms of your standard deviation or volatility or Sharpe ratio, it would be shown for the date you've selected for, right? From the start date, whatever it is.
Always, yes. Always, yes. So you change the date, all the results will change. Everything, all returns here. Even, for example, even if you look at the drawdowns tab here, if you actually, you see a drawdown at the beginning part in 2017, for example, this one has. If you choose a start date later on, the drawdowns will be recalculated, and you'll only see the ones that has happened after that.
Okay, fair enough. Thanks.
Hello.
Yeah, please go ahead.
Yes. Actually, my question is not regarding today's topic, but something else. So it is regarding Sharpe ratio. So when I compare or shortlist the funds, the Sharpe ratio, if I just select the shortlist the funds according to Sharpe ratio, so I think there is some discrepancy with respect to the funds Sharpe ratio and what I am seeing in the portal. So can you just tell me how is this Sharpe ratio calculated?
Sure. So basically we use, for the calculation of Sharpe ratio, we use the excess return over the, the absolute return of the fund over the period, simple returns, not CAGR or compounded. And we divide it by the standard deviation of daily returns. We have seen some discrepancies within, especially compared to other reports or even the AMC fact sheets. And the reason for that is quite a few times you might see that the standard deviation may or may not be calculated using daily frequency. So we always calculate standard deviation using daily returns of funds. So that could be one source of the difference. But everything you see here is calculated by us. The only statistics that are not calculated by us are some of the holding numbers, which are basically things like PE, PB, they come directly from our data provider, and also YTM, average maturity duration, they come straight from the data provider.
Okay, but even though if you calculate it on the daily basis, so difference shouldn't be much, na? Because for example, if you take the example of this PGIM ELSS fund, so what we are seeing here is the Sharpe is around 0.4, and
Okay.
If we see the fact sheet, it is somewhere around 0.7.
And so if you have specific ones, we can take a look at it. Obviously, we will have to make sure that we match the period. We have to make sure that the risk-free rate is the same. So let's load that up. So you get about 0.4.
Right.
Is the time period that you're looking at when you see 0.7 is, I'm guessing that will, let's try 3 years ago or something, maybe it changes. But obviously the time period needs to match. It's getting closer now, but wherever you saw 0.7, we have to first check what the time period of the Sharpe ratio is, obviously.
Okay, and what does the AMC consider as a time period in the fact sheets?
I am not sure. I must admit, I'm not sure what they use. This will have to be checked on their. I would say that there must be written on their disclosure somewhere, but the two major reasons for the discrepancies, one will be time period and the other will be the method of calculating the denominator, which is the standard deviation. If you calculate annual volatility or standard deviation using monthly data, it can be quite different, and that can easily account for the difference. So it'll be one of these two. If you have some particular concerns, if you just let us know which ones, and we can maybe do the calculation and send it to you, and just to show you what we have done.
Okay. And can we just, as we change the date here, the start date, can we do the similar thing in the funds section while shortlisting the funds, while screening the funds?
Yes. So in the compare section, you can. So in the compare section, if you have a bunch of funds, there is the first box here, the return columns. Once this loads, you can click the settings icon, and then you can put, let's say, a particular start date in here. And just select the date, and once you click go, all the data is, you can see, recalculated.
Okay, but not in the funds section, right?
Not in the screener, because the screener actually, the screener looks at the entire universe of funds. So therefore, it basically looks at all data since inception.
Okay, the inception is the date is considered as the common date of inception or individual fund's inception date?
In the screener, it is always individual fund inception, whatever the Sharpe ratio of the fund will be. If you want to do analysis fully where all the data is matching exactly in terms of dates, then this is the section to use. So for example, I mean, here you can load a lot of funds if you want. Again, here you can make sure that the dates, in fact, this section won't let you even look at funds where the dates are not matching. So it will actually force you. It won't let you go back, for example, on your start date, past that date. So for example, if you do risk versus return, it's not going to let you go before 2013 because that's the date where the first, that's the minimum common period.
Okay, got it. All right, thanks.
Thank you.
Arnab, another question is, so basically when we are comparing two portfolios, it doesn't basically show the standard deviation or what is the alpha which has been generated with each other. Yesterday also I spoke to somebody from your team, so they said they're working on it.
So here you can see the return, you can see standard deviation, you can see Sharpe ratio. If you mean excess return over a benchmark?
No, basically on the screener we're able to see it, but when you're clicking on PDF, while you're trying to generate PDF,
right,
these things would not showcase. If you can quickly
these statistics will show up on the PDF, the ones that you can see on the screen, right here.
Maybe I'll just recheck once again.
Yeah, it should be on the, it should come on the first page. If for some reason it's not coming up, please just write to the support@ngenresearch.com and we'll take a look at it very quickly.
Fair, yeah. So you're saying whatever which shows on the screener, typically when you're generating any PDF, it should
it should, I would say most things. There are some tabs, like for example, the distribution tab that doesn't show up in a PDF. We haven't put it because it's, most people have said the clients probably might not look at it. It's more for the user, for our users to look at rather than for client reports. But yeah, I mean, anything important in here will definitely make it to the report.
Okay, fair.
Arnab, if I can extend the same question, the correlation matrix and the overlap matrix, the shaded color doesn't come in the PDF or the Excel. We had to do it manually with the conditional formatting.
Okay, so you're talking about the portfolio overlap in the compare section.
Yeah.
So okay, let's just have a look at it. So see, the Excel download won't have it.
Similar, this one.
Yeah, no, see, the Excel is actually a CSV file, so we are unable to add any formatting to that.
So is there any solution?
We can try. We have looked at some Excel download options, with including formatting. At this point, nothing that comes out of the platform actually comes as an Microsoft Excel file. It comes out of a CSV file, which obviously opens up in Excel. But if you want the colors, I mean, we'll try to see if that's possible.
In this chart, whatever you took it in Excel, rows and column titles comes, but in the other one, say this is overlap, but in correlation, the column title doesn't come.
Okay, just let's have a look. Okay, so the column title will come as soon as you hover with your mouse. Otherwise,
so if I take it in Excel for the client purpose, then similar to this, it's missing in Excel also.
You mean the colors?
Colors as well as titles, column titles.
Okay, so here there is no Excel download. It might be in the portfolio section. Can you check quickly?
So probably we would have taken by way of copy paste.
Okay, so there is an Excel download. Just have a look at this one. So yeah, the
It's
titles
coming.
are coming, but
Colors are missing.
but the colors are not coming because
I
obviously
think in
CSV,
either of these two tables, somewhere I saw column titles were missing. So let me just figure it out where the column titles were
do
missing,
let
and I'll
us
put
know.
an email.
Definitely, we'll fix it.
That's all. Thanks.
Perfect. Thank you. Any other questions, please just let us know. There's something on the chat where they're saying that you've noticed some difference in AUM for funds. Generally speaking, all the data is getting updated. If we get any issues, we basically let our data provider know, and in most cases, they're quite quick at responding. So if you do see something that you think is not right, do let us know at support@ngenresearch.com, and we will check it out. Yeah.
So Arnab, how long do you think it might take for when you're doing the comparison between two portfolios, bringing in the PPT? You said you're working on it. So any timelines you're looking at?
For a PPT download of this, yeah. So our next, after the comparison drawdown that was released, our next focus was actually going to be on kind of getting some model portfolio strategies out there. Mathematically generated one. So that's what we're currently working on. But side by side, we are also working on other features. So compare PowerPoint, at this point, I would say probably a minimum of 30 days. So I hope that within that time frame we can do something. But if not, we will definitely start working after that. But in the next 30 days, we'll be coming up with as much as we can.
Okay, fair enough. And also the timelines for these model portfolios strategies inbuilt, you're planning to get them?
So that's the current focus right now. We've actually built a few. Obviously, we are not using our own kind of advice or thinking here. We're using mathematically kind of sound mathematical strategies, and we're making it very, very clear how we are coming up with the portfolio. This one is an example. For example, so we are using only functionality that is available on NGEN Markets. So this portfolio, for example, you could have come up with it yourself using NGEN Markets, right? And in the end, you would use the improve button and take the portfolio weights in that way. So all the strategies we've developed are basically made on NGEN Markets using very, very easy to explain steps. So that's our main focus right now. We hope that in the next 30 days or so, we can launch the new section, which should show up on your left-hand side, called strategies.
Okay, so how many of them you're planning to get them on board?
At this point, we have about 7. Again, none of this. I mean, I'm not guaranteeing exactly that it will look like that exactly, but so far, what the scene is we've got 3 in equity, 3 in debt, 1 for liquid, just in case. We're also trying to make it so that you can combine those with each other with your own thinking to make a final portfolio, if you like. So that might be part of the solution as well. But 3 in equity, kind of medium, high, and low risk, and 3 in debt similarly, and 1 in one as a liquid strategy. And we're also probably as a step 2, we're also going to look at creating some other more interesting strategies. Let's say a global one, or maybe some thematic ones.
Fair enough. Thanks.
No problem. There's a question on the chat saying when we download the PDF for fund comparison, I'm not getting the overlapping funds name on the upper side. Okay, so PDF for fund comparisons. Yeah, can we just check? I think maybe you meant PowerPoint. So in the PowerPoint on the upper side, we actually, what we've done, we'll show you, is because obviously the name is quite a long thing to become a column header. There's just not enough space. What we've done is we've taken the first few letters of the first few words and made a code. So we'll just show you. So hopefully that will suffice. Let's just open that up. So here on the top, when you see, basically, in this case, KOEO is basically the, Kodak Equity Opportunities Fund, ADBS, Aditya Birla Sun Life Mid-Cap Fund. So, that was the best solution we could find in terms of fitting something on the top. Obviously, when you're using the platform, you can just use your mouse, and on the hover, you'll see the full name on the top. But in this case, what we have to do is use some kind of abbreviation. These are automatically generated. So, but hopefully they are good enough that you can recognize what you're looking at. Basically. Okay, if there's no other questions, Umair, I think we can close up.
Hello.
Sure. So,
Oh, sorry.
Yeah.
Please go ahead.
ऑप्टिमाइज पोर्टफोलियो किया तो उसका जो प्रिंट आउट या क्लाइंट के लिए भेजना है तो वो जो ऑप्टिमाइज पोर्टफोलियो का जो प्रिंट दिखाई देता है पीडीएफ में, तो उसमें सब जो कॉलम्स है वो ब्लैंक क्यों दिखाई देते हैं? पहले जो है वो ये जो है ना क्यूमुलेटिव रिटर्न, CAGR, एनुअल रिटर्न, और ये जो ग्राफ है वो सब वो दिखाई क्यों नहीं देता?
अगर आपने कोई पोर्टफोलियो चलाया है एंड और यहाँ पे आपको पूरा खाली आ रहा है, तो इसका मतलब उस पोर्टफोलियो को चलाने में कोई गड़बड़ हुई है। तो अगर आप हमें अपना ये जो support@engineresearch.com ईमेल एड्रेस हमने चैट पे लिखा है, अगर आप एक बार हमें बता दीजिए वो पोर्टफोलियो क्या है। उमेश जस्ट गो टू डाउनलोड पोर्टफोलियो। अगर आप उस पोर्टफोलियो को रन करेंगे यहाँ पे, और ऊपर एक डाउनलोड पोर्टफोलियो का बटन है, आप इसमें आपको एक एक्सेल मिलेगा। ये एक्सेल आप हमें भेज दीजिए एंड हम उसको देख लेंगे कि अगर उसमें कोई इशू है तो हम आपको बता देंगे कि उसको ठीक कैसे करना है।
ओके, ठीक है,
थैंक यू।
और एक ओके, और ये हम लोग क्लाइंट के लिए भेज सकते हैं ना? तो मैं तो वही देख रही थी, कंपेयर का आता है, कंपेयर का मैंने पीडीएफ निकाला तो वो बराबर आया, लेकिन ये जो ऑप्टिमाइज पोर्टफोलियो है वो मैं भेजना चाहती थी, वो बराबर नहीं आया। उसका ये जो पोजीशंस है वो आया बराबर, क्यों यहाँ स्क्रीन पे दिखाई देता है लेकिन वो पीडीएफ में कुछ
ये पीडीएफ का बटन ऊपर, जो ये ऊपर वाला पीडीएफ का बटन है, ये आपने क्लिक किया?
हाँ, यस।
अच्छा,
वही
तो
करना था ना?
अच्छा, तो आपने जब पीडीएफ क्रिएट किया तो उसमें डेटा नहीं आ रहा था?
हाँ, यस।
अच्छा,
और ये ऑप्शन भी नहीं आया अभी आपने क्रिएट पीडीएफ करके आया ना, वो भी नहीं आया,
आप गूगल क्रोम यूज कर रहे हैं?
या
अच्छा, तो आप एक बार प्लीज हमें support@engineresearch.com पे लिख दीजिए अपने ईमेल आईडी के साथ। अगर प्रॉब्लम सॉल्व नहीं हो तो हम एनी डेस्क पे आके चेक कर लेंगे कि इशू क्या आ रहा है।
ओके। support@engineresearch.com। ओके, ठीक है।
There is another question saying, while comparing debt funds, which benchmark is the best? So I mean, see, generally speaking, this will be your decision. What we have given you is in the compare section. If you actually, just go to one of the fund analytics that's open up, so we can look at the benchmark table.
और एक मुझे
हाँ जी,
क्वेश्चन
हाँ जी,
था
बोलिए
कि
बोलिए।
ये जो आप ये एनालाइजर है ना, स्टेटमेंट एनालाइजर,
हाँ जी, हाँ जी,
तो इसमें जो लिखा है ना कि NSDL, कैम्स और CDSL, ये हम लोगों को अलग से डाउनलोड करके सेव करके यहाँ लेना है, चूज करना है, या हम लोग NSDL और कैम्प से वो मंगवा सकते हैं
हाँ जी। देखिए,
क्लाइंट के
ये
वजह से?
या तो क्लाइंट आपको ये दे देंगे, उनके पास
हाँ
होगा। अगर
हाँ
नहीं
हाँ।
होगा तो क्लाइंट, मतलब वैसे क्लाइंट को ऑर्डर करना पड़ेगा, वो क्लाइंट के ईमेल एड्रेस पे ही जाएगा आपके आपके
ओके।
फिर जब क्लाइंट से आप लेंगे तो उसका जो भी पासवर्ड सेट हुआ है वो आपको
हाँ।
पता होना चाहिए। उसके बाद आप पासवर्ड को यहाँ पे टाइप कर दीजिए एंड यहाँ पे अपलोड करके एक बार आपको चेक फाइल बटन, ये चेक फाइल का बटन क्लिक करना है। चेक फाइल में वो ये चेक करेगा कि NSDL, CDSL या कैम्स है कि नहीं। एक बार वो चेक हो जाए, एक और बटन आ जाएगा विच इज सेइंग कि अपलोड कर दो। अपलोड कर देंगे तो आपको बाद 10-12 मिनट लगेंगे अपलोड होने, 10-12 सेकंड लगेंगे अपलोड होने के बाद राइट साइड पे आपके यहाँ पे लाइन आ।
ओके ओके। और ये जो पोर्टफोलियो है, वो पोर्टफोलियो हम लोग यहाँ जो क्लाइंट में दिखाई देता है वो एक ही है ना, सब सेम ही होगा ना?
हाँ जी। तो मतलब देखिए, यहाँ पे आपने जो अपलोड किया, इधर उस रिपोर्ट में जितना भी डेटा है वो यहाँ पे सेव हो जाएगा। उसके बाद जब आप वापस जाएंगे मेन एप्लीकेशन पे, यहाँ पे, तो आप पोर्टफोलियो सेक्शन में जाके नया पोर्टफोलियो क्रिएट करने जब जाएंगे तो यहाँ पे आपको स्टेटमेंट एनालाइजर का ऑप्शन मिलेगा। तो ये यहाँ पे आप क्लिक करेंगे और उसके बाद ये प्लस बटन दबाएंगे तो ये इस स्टेटमेंट में जितने भी फंड या स्टॉक्स हैं वो ऐड हो जाएंगे पोर्टफोलियो सेक्शन में यहाँ पे। उसके बाद आप इसको क्रिएट करेंगे तो वो सेव हो जाएगा। और अगर आपको सेव नहीं करना तो आप सिर्फ रन करना तो आप रन करना।
ओके। कल तो ये भी नहीं आ रहा था, मैं देख रही थी कि एक वीडियो पिछले बार, ये जो है ना वैल्यू ऑफ इन्वेस्टेड फ्रॉम एंड करके,
हाँ
तो
जी,
कल मैं एक बार मैं तो अब्रॉड हूँ, तो
हाँ
मुझे
जी।
टाइम का भी, अभी आज का भी पहला सेशन मेरा मिस हो गया। तो ये कब यूट्यूब में अपलोड होगा?
ये 1-2 दिन में हो जाएगा। आप ऐसा करिए, आप हमें support@ngenresearch.com पे लिख दीजिए। हम
हाँ।
आपका एक ट्रेनिंग सेशन ऑर्गेनाइज कर लेंगे जहाँ पे आपको हमारी टीम से कोई फोन करके आपको सेपरेटली आपके साथ एक सेशन कर लेंगे। वहां पे आपको सारा का सारा प्लेटफॉर्म में जितनी भी
डाउट।
फैसिलिटी है पूरा दिखा देंगे। आपके जितने भी डाउट्स हैं वो क्लियर कर देंगे।
ओके ओके, ठीक है, चलेगा चलेगा।
थैंक यू।
थैंक यू।
There was a question about while comparing debt funds, which benchmark is best. So we've got some debt benchmarks here in the TRI tab. So you can choose, from any of these. You've got the Sisal Bond Index, the T-bill index, and all the tenor indices in here. We are actively trying to find a few more benchmarks that we can add. Recently, we did add quite a few equity benchmarks from Nifty, especially the volatility indices, etc. So we will now try to find some debt benchmarks to add to this list as well. There's another question saying that there's a suggestion list that has come through Umair. So yes, we rest assured that we are looking at all the queries and we're going through them as fast as we can and implementing as much as we can as a result of that. So we're definitely looking at that. There's another question saying in the benchmark selection option, I'm not getting Nifty liquid index, Nifty lure duration, and other. Okay, so I believe I think these are some of the debt indices. Umair, can you just quickly check in the NSE tab in the benchmark section? Yeah, just type liquid or something here to just see if any of them have made it through Nifty or liquid. So we have a couple of them here, if that suffices. But we are definitely looking at getting more debt benchmarks in. Some of these are the ones that have been added recently. Okay, perfect. If anybody else has any questions, please ask on the chat or just unmute and ask. Okay, Umair, I think we can then go ahead and close.
Thank you so much, everyone, for attending this session. So we will come again next week, Friday, 4 o'clock, same time. We are actively adding new videos in our system, so you can just go ahead into our YouTube channel, and we are also going to be update videos as well in this channel as well. So that is it for today, and thank you everyone again. Have a nice weekend.